Good afternoon, everybody. How are you? Yo, world. It's been quite a day today. So it is my privilege to be here with you good folks. And share some of what I know. Hopefully, some of it is useful on your journey into becoming a day trader successfully or a successful investor. Wow, open. Let's just cover some basics here real quick. Familiarize yourself with the required government disclaimers as we get started here this afternoon. Morning, George. Good afternoon, sir. Hi, Dean. Hello, hello. And last but not least, okay. Let's get started, shall we? I am fascinated with markets. I'm fascinated by the puzzle, all of it, the whole 9 yards. And I'm especially intrigued by its predictive nature. Now, the predictive nature of markets is relatively self-evident when we look closely at what's happening. Here we have an E-mini Nasdaq chart. And I have a daily bar analysis plotting the open, high, low, close for each of the 24-hour periods that the Nasdaq was open. Historically, I was taught, as were many of you, that the only way to trade was to use some form of technical indicator. 80-20 crosses or MACD reversals or zero line crosses of the MACD, things like that. How many of you kind of started your career out that way? Could have been volume, could have been any one of a number of 100. Gosh, it seems like there's a never-ending list of tools that you can kill yourself with. And over a period of months and years, I, like most people, thought, well, the more of these things that I have, the better off I am. And my charts began to fill with knowledge. And all of that knowledge was lagging, meaning it told me what had just happened, or what had happened 14 bars ago, 13 bars ago, 60 bars ago, right? And I started digging deeper and looking further down the rabbit hole. And there's some interesting things that begin to happen when we look on the other side of the window. When we look on the other side of the glass and begin to dig down into the nuts and bolts of why markets move. Why? Why? How is that happening? What's causing it? What's causing that to happen? And I was intrigued by it. Let me see if I can find something here real quick. Here's what I want to look for. Inventor name. Stand by 1 second. I just thought this would be interesting to some of you. I can't find it here. I thought I would get ready, but I have a total of 6 credits for US patents in my career as an engineer. I can't figure out how to use this stupid website for the patent. But I've always been interested in how machines work. And so what's different about this chart that we're going to talk about here in a minute is that it's not lagging. In fact, it's the opposite of lagging. It's leading. And I want to show you what I mean by that. So everywhere I'm putting my vertical line right here, Everywhere you see a little green dot on this chart, Aaron, do you know what that is? Or let me step back 1 second. What happens when a little green dot appears on this chart? Guys, ladies, gentlemen, what happens to the E-mini S&P, or in this case, the Nasdaq, when we arrive on a daily bar that has a little green dot? Anybody want to take a swing at it? I promise there's no consequence if you answer. $5 doesn't disappear from your credit card account. Okay. When's a good time, based on the 12 signals or so that you see here, to get out? When would be a good signal to cash out and wait? What color and what size dot would be a good time or a good signal? I want you to think about that. Small red dot, little red dot, or large red dot. Yeah, here I am. Melissa, I found it. These are all mine. See that? I designed this machine. I designed that machine. I designed that machine. I designed that machine. I designed this machine. I'm so happy that I found it. That's cool. Anyway, let's walk down memory lane just now. Yes, you're absolutely right. Now, most of you said I would get in here and I would get out at the next little red dot. Okay, so let's write that down. We're somewhere in there. In the shallows. So from here to here. From here to here. From here to here. And now from here to question mark. Well, if we're taking swing trades, there's a very interesting thing. Do you know what you need to trade this system? You need eyeballs and a place you can see the sky at night. Everywhere you see a small green dot on this chart is the first quarter phase of the moon. For those of you who have no idea what I mean by that, if you look at the moon, there is a point where it is half full, where one half of that bugger is full. If I can get the signal to draw right. There we go. So when half of the moon is full, that day is your buying pressure signal. Now, you also said that the little red dot was sort of a maximum, and you'd be right. But guess what? No MACD required. That signal is generated by a third quarter phase, or a moon half empty. I have a customer in Australia. He's a force customer. And Melissa, he makes $200,000 to $300,000 a month trading options in the big contract S&P with, I think I'm saying that right, with moon phases. So I'm going to come into the software and I'm going to get rid of all the signals but the first quarter and the third quarter. Now, have I done anything here that's unverifiable? Have I done anything here that you couldn't sit down and in 10 minutes sort of figure out on your own? No, right? I know when the next third quarter phase is coming. Guess when it's coming? In 5 days and 17 hours from now. In 5 days and 17 hours from now, there will be a third quarter phase. Now, you can go on Google and you can type moon phases 2019, 2020. And guess what? I have all the times for the next year. So Ford, check this out. Don't panic on me, hang on. Last quarter is a selling pressure signal, right? Third quarter. No magic or mystery here. And then first quarter is every place I'm putting a green arrow. Is everybody with me so far? Hang on, this is not a hippy-dippy tree-hugging webinar. We're exploring the science. Gann said people aren't successful because they don't like to think and they don't like to apply scientific methods to trading. And the guy was one of the most successful traders in history, according to people who interviewed and watched him trade. So Aaron, here's the link to the site. There's no surprise here. I'm going to share that with you. And as we scroll down, here's 2020, right? 2020 is right here. So Ford, on October 1st, 2020, nearly, what is that, 10, 11 months from now, at 5:41 p.m. Eastern, we're going to have a third quarter phase or a red dot. Do you understand the predictive nature of that? Is there anyone here who's confused about the predictive nature of what we're discussing here today? Many of you, you kind of like, you're staring at me with your mouths open right now, and that's fine. I understand this is a little hard to digest, but I'm bringing science to the equation, to the table. Okay. And so as we start to parse that out, Aaron, we're demystifying the markets, aren't we? We're peeling back a layer of them that a few minutes ago, if I had told you this, your initial reaction would probably be, nah, hocus pocus. You'd heard about it, but you didn't think it really mean much. Now, what's causing this to happen? And who's in on it? Well, we don't have to look very far, because if you look close, the bastards will tell you that they're doing it. Meaning the people who manipulate markets are telling us in plain sight how they're doing what they're doing. This quote was taken from the original J.P. Morgan. The dude. Millionaires don't use astrology. Billionaires do. So, Aaron, do we have some proof or insight into how banks manipulate markets? Do they have the same inside track that we have into human physiology and human psychology? Are they keyed in on and dialed into the fact that we are humans being, and that we have a sensitivity to changes in the Earth's electric and magnetic field? Have they figured it out? Well, very recently, there was a study performed. This just happened in 2019. Scientists discover evidence that your brain can sense the Earth's magnetic field. And they hooked up people to one of those brain measuring thingies where they can sense whether or not you can feel what's happening. So guess what? When the moon in the sky is reflecting 100% of the radiation coming from the sun, that radiation hits the Earth and affects the magnetic field in the best way it can. When you have 0% of that radiation reflecting off the moon and coming to the sun, there's a minimum energy, a minimum signal being picked up. And so when we look at this chart, what we're seeing here is a scientifically demonstrable theory playing out in the markets that banks are clearly leveraging. Now, how do I know they're leveraging it? Yeah, the date and time, it's in the corner. Absolutely. 12/16 at 5 p.m. is the next third quarter phase. Yeah. There's no magic there. Everybody with me so far? I promise I'm working into an actual thing that we can apply. But I wanted you to see that there's a difference between a lagging indicator and a leading indicator. The banks don't use lagging indicators. The banks don't want you to know that they do this. The banks don't want you to know that they do this. Now, here's the plan. Here's the secret. I'm going to release the secret to you right now. You are most likely to do the thing on date X. Banks will do the opposite thing just before date X to get your liquidity. Okay, now stay with me. Dean, this is the seed. You're looking at the precursors of it, yes. This is one of the steps that leads me to that epiphany. So, for example, if we know that we're coming into a buying pressure day, and there's, let's say, Melissa, there's a stack of support right here. What they'll do, Ford, is they'll come up, and then the day before that first quarter phase, they'll run the stops. Let me say that again. The day before, they'll run the stops. And Aaron, the reason they do that is to create fear. All of the retail money will watch those shorts come in. Everybody's been long from here. So there are longs on this side, and then they trap the longs and run the stops. Now, everybody that was long on this down move, Dean, what happens? What do the retail traders start to do? They're selling into the move, right? It's really going down. This is what they talk about. But who are they selling to? Who's buying the contracts down here? Okay. Then what happens on the first quarter day? Everybody wakes up. Take a look at what happened just recently. You see this right here? What happened on this bar? It blew through this low. It blew through that low. It blew through this low. It blew through that low. It blew through this low. It blew through this low. It blew through this low. And it blew through that low. At the time when you are just about to physiologically wake up and feel great. Remember what we just learned about? You are about to wake up that day and go, I don't feel panic at all. I feel pretty good. I feel amazing. I'm getting some positive energy. You know what? Screw this. Let's buy. This is a good opportunity. And now everybody gets in, and that signal gets stronger and stronger and stronger and stronger. You'll see it over and over again. Ford, can you see it right here? There's the high, the previous swing high, right? They just do it. How about this one? So, of course, they have to break this high. But guess what? You now know to look for one of these, and one of these, and one of these, and one of these, and one of these. You know when it's coming. You know what happens when it comes. Let's take a look at some other markets like this. Can I take this chart down, or do you want me to leave it up for a second? I'll take a screenshot and I'll post it in the room so you guys have it eternally, ladies as well. So I'm laying the foundation, I'm laying the framework for what we're going to look at intraday. Let's take a look at the euro US dollar with all the Brexit stuff that's going on, right? And let's do the same thing. Or you know what? Let's do something different just to mix it up. Stand by while the chart loads. Okay. This will melt your noodle if it's not melted already. Let me make this screen a little lighter, darker, forgive me. I'll go to a darker background. And let's turn off some things here. Number of bars, 1. Number of bars, 1. Green, red. Okay, can you guys see this okay? Okay, this is the euro against the dollar. I'm going to ask the same question that I asked yesterday or earlier today. Wow, I wish it was yesterday. What happens at the green dots and what usually happens at the red dots? Come in here real quick. Just fix this while you're answering that question. Okay, so now, yeah, let's do that. We'll put a white arrow underneath the green dot days. And then we'll put a red arrow, or yeah, we'll use the same color, white arrow, over the red days. So in our last example, we talked about how the moon reflecting solar energy, solar radiation, directly correlates with deltas or changes in the Earth's magnetic field. So we understand that the moon has a leading effect on the Earth, right? Okay. So Ford, one of the things, if that's the case, The moon is a mirror reflecting EMF. So Chris, if the moon was here and it had that effect on the Earth, what would the effect be if it was closer? More pronounced or worse? Weaker or stronger? If the moon was closer to the Earth, if the mirror reflecting those things was closer to us, would the signal be stronger? Stronger, yeah. Well, here's the thing. The moon travels around the Earth in an ellipse. And there are 2 points in that ellipse, Dean, where it's closest to us, and 2 points in that ellipse where it's farthest away. So if you remember back from geometry class, these were called focal lengths. And so we have F1 and F2, the primary and the secondary. They're also known as apogees and perigees. And I'm going to put a link in the chat box to the calculator for that. And guess what? We can change it. The color's too light. All right, I'm sorry. I'll make it a little darker. Dark gray, how about that? Better? Okay, cool. Well, we can see that effect on different markets, right? We can put F1 and F2 on different markets. For example, everywhere we have the moon closest to the Earth, Ford, what happens to the price of gold? And when's a good place to sell if you bought at that point? And what happens if we look at it really far into the past? We can use a lot of different things. We can look at different pairs, the euro yen, for example. We can look at CL. And we start to see that we're tied together as a species, that we have, it's loading up right here. I loaded 10 years worth of signals. We have a weakness when it comes to these things. We have a weakness, a vulnerability when it comes to these things. We are hardwired to respond in kind. Now, I showed you all that for two reasons. Number one, I want you to learn something. Banks know something about you that you don't know about yourself. That's wrong. It's manipulation, and it's unethical. But guess what? No one is coming to stop them. They've been doing it for centuries. And their game is demonstrably leading, meaning they're not looking at what happened in the past. They're not looking at structure or support and resistance. They're creating those things. They're creating structural highs and lows and support and volume nodes, and all of those things you were taught by other vendors are the most important things. They're creating those like landmines. What happens when you step on a landmine or you touch it? It explodes, destroys things. Only in this case, it destroys people's accounts. And so banks are saying, look, over here, everybody is going to be excited and happy. So right before that, we're going to crush their hopes and dreams and scare them irrationally. We know that over here, people are going to wake up and feel horrible. No energy coming into their little antennas, miserable. And so right before that, we're going to make them doubt that sensation. We're going to drive it up right before they agree with us, and we drive it back down. And so I had this theory. Can we detect these patterns intraday? Can we detect these patterns intraday? And the answer to that, I think, is yes. And so one of the ways that I prove it to you that removes me from the decision process, right? I don't want you to depend on me as a guru. I don't want to be a guru. I'm not your guru. I send out an email, usually on Tuesday mornings. And the email has a link to a web page. We'll go ahead and draw the universal symbol for mail. And that web page has the leading times for Wednesday and for Thursday. And then we come out of the market on Thursday to see, did our little lunar moves work? Did our little lunar distance moves work? Did these leading times and directions we discovered actually play out? So first thing we need to do is come back to the futuretrading.com histogram forecasts. This is the link to the page that I send out every week. I'm gonna be honest with you, it's boring now. 10 years in a row, I do this 500 times, almost 600 times now. But look, if we go to crude futures on a 1-minute chart, this was my moon map. This was my lunar phase chart. Now, can you guys see here? We'll change the color. Ladies, it says 857 right here. And can you see over here on the bottom where it says 857? And on this chart, it says 848. And over here on this, it says 848. I sent this chart out Wednesday morning. This chart is today. So this, in a very real sense, was leading, sort of like knowing when the third quarter phase is coming, sort of like knowing when the apogee or the perigee is coming. Well, what does this mean? What do these times signal? Well, when we get to the times at the top of the chart, and we can do this with any market, any time frame. I can do it on 5-second charts. I can do it with wrinkle bars, volume bars, tick bars. I can do it on daily charts and weekly charts. The software, Aaron, is telling me when the dark moon times are coming and when the light moon times are coming. Only these don't have anything to do with moon stuff. This is a completely different technology. But I introduced you to the concept of a leading indicator to show you that this is the language of institutional trading. It is never a surprise when a move occurs. Bear Stearns was not a surprise to that industry. The 2008 collapse was orchestrated, it was engineered. The further we get from it, the more evidence we have that not only did they know about it, they created it, and not only did they create it, they profited from it. Banks in 2008 made more money in the collapse as a result of the collapse than any other time in modern financial history. Even this massive bull run, they haven't made as much money as they did during the crash, which makes you start to wonder, what are they setting up? Right now, there is an unprecedented number of puts on the US market a year from now. A year from now, there are more options betting on the market collapsing from an institutional perspective than there have ever been. And so it's really interesting now, Aaron, because what if we come back and look at these times? So I want to look and see, well, what actually happened in this market? Were there moves that we can point to and say, hey, it looks like they actually did something at those times? So Aaron, the software, when it gets to the close of the candle, will print a white dot for the buying pressure times the software uncovered. This program, like I said, this is all I've done my entire life. All I've done my entire life is make stuff. It's what I know how to do. Right? This is what I know how to do. Take things that don't exist and build them. I want to know how things work. And so, Aaron, take a walk with me. And let's just look really quick and see which CL times actually reacted the way we were anticipating them to react. Which CL times actually reacted intraday, obviously, right? None that are kind of which ones on the buying pressure side actually pushed up? This is a warp channel, a warp chart, yes. And then Aaron, which one of the signals actually caught this one within 1 bar, right? Actually caught them sneaking another play past everybody, even if they're small reversals. Your eye can see that, right? The biggest move of the day. How many of you saw that candle out of nowhere? In my pro room, we caught the bottom of it. We had 6 ticks of heat before it went up 60 ticks in 5 minutes. And so here, forward from the open to the 939 signal is a $520 move. What's going on here, guys? This is one of the most unpredictable markets in the world, isn't it? Aaron, how can we know when banks are most likely to push prices higher? I got you, Ford. And which times are most likely to fall 2 days in advance? How would we know that? Because the game is rigged. And they set the markets up in advance, like a surprise party, and everybody acts surprised. Oh, I had no idea it was going to go up just now. Oh, I had no idea it was going to go down. Now let's see if it happened on the 1 minute NQ chart today. Aaron, this is from the pre-market of the US session to lunchtime. We had signals with trend. Signals with trend at 758, 824, 847, 908, and 926. So this chart, every week I do the same thing, is using a 120 period EMA. And when the line is moving up, it turns white. When the trend is moving down, it turns blue. So if everybody's selling, Aaron, and we get to a time where the banks are going to join in, I want to be in that number. I want to be in that number when the banks come marching in. Take it, Melissa. Are in those saints marching in? No. All right. Nothing. So we enter on the close of the candle. We exit by the next signal. We enter on the close of the candle. We exit by the next signal. We enter on the close of the candle. We exit by the next signal. 5 tick loss. We enter on the close of the candle. We exit by the next signal. We enter on the close of the candle. We're stopped out. We enter on the close of the candle. We exit by the next signal. We enter on the close. We exit by the next. We enter on the close. We exit by the next. We enter on the close. We have a stop out. Enter, stop out. Crosses over the moving average. We enter and we exit. We enter and we exit. 11:44, right before lunchtime. Hanging on. Small loss. Let's add it up real quick, shall we? Because we should have more money than we lose if we follow the banks when they do this shenanigan. Let's go ahead and add it up, shall we? Okay, 13.5 plus 5.75 plus 2.5 plus 38.5 plus 12.75 plus 8.5 plus 2.5. There were $79 on the high side. Okay, minus 1.5 minus 6.75 minus 4.75 minus 8.25 minus 10 minus 7.5. At the end of the day, if we follow this, we're up $40 hypothetically. The Nasdaq is worth $20 per dollar. And following the times that the software produced in advance, these are actual NQ times. Actual NQ times. Aaron, at the end of the first day, our winners were twice as big as our losers. A trend system is historically 45 to 50% accurate. We are. And we made way more money than we lost. Following signals from when? From 2 days ago. What's going on? Well, is it any different from the lunar stuff? Is it any different from these things that we were looking at a second ago? We know the times in advance. We know that banks are looking for those times to do nefarious things. Right? Okay. Questions. How many days in advance can you know the signals? These signals were known 1 week in advance. So on Wednesday, who asked the Wednesday question about CL? Steve did. Okay, so Steve, here's Wednesday in CL. What is CL, Steve? It's the inventory report, right? Steve, these are the times that the software gave us. You see, your computer is way smarter than you in the sense that it doesn't obey its emotions. We are emotionally insane. Do you understand that? It's crazy how many emotions we go through. But the computer has the ability to not be that. The computer doesn't think about things the way we think about them. And so, Steve, when I went back and I told the computer for our webinar today to prepare the times in advance for CL, look, there it is. Wednesday, CL, 1 minute chart. There are the times as they come up. Can you see it here, Steve? 1022, 1036, 1109. 1022, 1036, 1109. 1022, 1036, 1109. 11 o'clock, 1136, 1149, 1156, 1212, 1218, lunchtime, still going. Maybe they'll stop now. No, 1231, 1242. Let's push it up a little bit right before we drive it down. No, Brad, I filter my signals with trend. Russell, this is a precursor to force. I'm going to type something to you right now. Okay. Yesterday, Steve, was also FOMC day, and we have one rule in my pro room. Yeah, no, I appreciate that. So on the 3-minute chart, I wanted you to see the 1-minute chart, Steve, because it provides more resolution. No, Dean, same here. I wanted you to look at the 1 minute because on an FOMC day chart, it's hard to see because the market is so condensed. It barely moved right before and right after the report. It kind of went into a stasis. So across those two, I wanted you to get a feel for how it actually played out. So, Steve, let me ask you this and everybody else the same question. Am I okay if I say the signals after the fact did what was expected 60 to 70% of the time? Is that a okay thing for me to say, or does that violate anybody's sensibilities? No, that's not true, Michael. You're a liar. You're a fraud. Fraud! Snake oil salesman! Okay. Good. Hey, Bill. I want you to look at the Euro US dollar 5-minute chart yesterday. Yesterday was FOMC day. So, Steve, no way it would work on the largest market we can analyze, right? No, absolutely no way. So right here, we'll put a little note, FOMC. Here's a stop run. This is the spot forex. So Russell, are we in a 60 to 70% window of accuracy on FOMC day with the Euro US dollar? Yeah. What's going on in this insane universe of ours? Can everyone see what took place at 5 o'clock at this signal right here? This is live. This was 5 minutes ago, 10 minutes ago. You had these signals since when? Wednesday morning. It's crazy. Juan, you see it every day, right? Okay. So now I want to kind of do an experiment with you here real quick. I always teach this. And I want to show you a tale of two markets. A tale of two markets. How many of you know what I'm about to show? You've been here before, you know the deal, right? Okay. So there's something very interesting about these markets. So Steve, for example, I can take any market and I can overlay other signals on top of it. So Steve, you were watching the CL 3-minute signals, right? What if I put this 3-minute signals from Crude on top of the mini Dow? I got a 3-minute chart open right here. So computer, take the CL 0120, forgive me, signals from a 3-minute chart. Take the CL 01 23-minute signals and put them, not the YM times, take the crude times and put them on top of the Dow. Steve, you see how it looks a little better when I do that? The whole chart kind of cleared up about 10%, 10 to 15%. Caught the 906 signal right here. Caught the congestion and then the continuation up. And so when I put the CL signals on top of any other market, the chart starts to clear up. So I did that same thing for the E-mini S&P today, just so you see what's going on here. If you look at the signals, and I teach this every week, so it's nothing new, I'm not curve fitting, but you'll notice that over here I've done the same thing. I've taken the crude times that you were watching, Steve, and I put them on top of the E-mini S&P price action. And what I discovered is that banks follow crude. Banks follow crude, and that's the most important thing to them in these indices. The S&P, the Russell, the Nasdaq, the Dow. Oil is God. And so when people say, what's the most accurate market? It's usually crude or gold. But the hidden secret is, if we apply that, if we apply those signals, this is yesterday, Steve, with the CL 3-minute signals on top of the ES. How many of you use this technique since I started teaching it about a year ago? You, a lot of people. Does that look like a pre-planned market or a random market, Steve? Russell? Does that look like they were just kind of punching buttons at each of these times and it's time to do it, let's go? Or does that look like things would kind of happen randomly and he's a nice guy, but gosh, I have a hard time seeing that it actually went up from 821 to 845 with the unemployment report, that it actually went down at the open. And then they had this little stop run here and closed higher by 1145. I don't really believe him when he said it went down into 1233, up into 103, and back down again into 133, back up again into 218. Pretty much went a little bit higher, but then at 315 at the end of the D, fell off the cliff. This stuff just doesn't work. Snake oil salesman, give me my MACD back. I watch order flow analysis. That's where the money's at. Okay. So if you take, you can put CL signals on the NQ chart. Yeah. You want to go look at that real quick? Sure. It's going to eat my memory up, but let's do it. Let's do it. So we all know this was an $800 day in the Nasdaq. We'll take that off. But now, let's come over here. Is that the data for today? Yeah. Okay, so we'll shoot this over here. And let's try it. I don't usually do it on the NQ, but I can. We have the times. I gave them to you 2 days ago. So let's be curious. And we'll tell the computer, hey, let's see if this has any bearing on CL. CL has any bearing on the NQ. I don't know what it's going to do. It's calculating, it's calculating, it's calculating, it's calculating, it's calculating. I don't know. How's that look? The NQ needs a larger stop than I have it set for right now on that time frame. Let's push that right there. And so we're looking to see, Steve, if there were any times that CL affected NQ. So this is the open. Where's 930? 930 is right here. So the software told us, look for it to go up from 920 into 939. Watch for selling pressure at 939 into 1007, 1007 into 1019, 1019, 1034, very short reversal, 1036. These are all the CL times that you guys had. And so let's just see how it played out. It closes higher, and then it goes sideways for most of that time. So it caught the selling pressure. Next trend signal is from 1007 to 1019. Next trend signal is from 1034 to 1036. Next trend signal is from 1046 to 1101. Next trend signal is from 1114 until 1120, and then from 1120 to 1126, and then from here to here. So if we use the CL times, the candle closes above the moving average at 936. We exit at the close of the 939 candle for $37. At 1007, we enter and we exit by 1019. Remember, we know we had $800 the whole day for the morning session with the raw NQ signals before. Let's see if we can beat that. 3 ticks, almost $12, a 5-tick loss, and a $4 winner right here. So we'll throw this one in here as well. That's a break even, a small winner. And this one actually turns out to be a loser. So let's add it up and see if it's any different than before. You'll notice that there are fewer losers. 0.5 plus 37.5 plus 10.5 plus 0.75 plus 11.75 plus 3.75 minus 1.25 minus 2.75. It's $60.70. I missed 1120 minus, oh, I didn't put that one in. Hang on. So it's $60 from here to here is another 8. So it's $68 times $20. Huh. So Joseph, you're telling me if I put CL signals on top of my NQ, it was a 50% increase in profit? That's crazy. But I teach this in every webinar. Go back and watch the last 2, 3, 4 webinars. I do the same thing. Every webinar, I do the same thing. I never change it. I'm boring. Believe it or not. If you've ever seen the movie Groundhog Day, that's how I feel when I do these webinars. I try to mix it up so that it's entertaining and unusual, right? I try to mix it up so it's a little different. Guys, the game is rigged. No, Brad, because it hadn't crossed the moving average yet, it has to close above the EMA to be taken as a long. It has to close above the EMA before we take it as a long. I have a video, if you'd like to watch it, on YouTube that goes over the settings or the signals I'm going to post it in the room here if you'd like to go through it. There's actually two that I've made. We have a YouTube channel at Back to the Future Trading. And one of them is called 2 Signals Using Time Only. Let me see if I can find it. I never see it right away. There's one here with 4 setups. I'll post that in there. And we teach this. We're happy to go over it with you. You'll see in a minute here, we actually have 2 setups based completely on time. It's probably right in front of me. Yep, there it is. Okay. So Brad, I'd start out with this second one if I were you. Yeah, Michael, I'll put the workspace up in a Dropbox for the settings. Not a problem. So what I really was hoping I could accomplish here today is an awakening of sorts for you. I'm the only company that does this. And it mystifies me, but not really, because this is hard to teach. This is hard to get past people's belief system. But I'm the only person, 10 years, Ron and I together, 10 years, we're the only company that gives you the times and the directions in advance. I'm the only one telling the truth. Most people want to believe the more lagging indicators, the better my trading room guy, the better his results are, the bigger my library is, the more money I spend on education. You want to believe that all of those things are real. And the statistics are overwhelmingly negative in regards to that approach. 90 to 95% of people will never become profitable traders. And those same people that I speak to, 90 to 95% of them are using lagging indicators and doing all of these things we talked about. So to break through the noise in your brain right now, I give you the times and directions in advance. I tell you what the system will be, simple trend entries and exits, before we get together. And then we come together and then we measure to see, let's add up the results. Because if they're truly random times, Russell, there's no way this can produce any kind of net positive result. It's statistically impossible. Can't do it. And yet, when we come and we measure, yeah, Dean, I just put the 2 links in there in the chat box. Just use one of those 2. When we come together, when we measure one morning session of the NQ, it's $1,200. How did we do that? So Brad, in this case, you see that candle where it closed over the moving average right here? You would have entered long on the close and your stop would have been below that candle right there. You didn't have permission to go long until the candle closed over the EMA. It is, Chris, yes. So let's go into that. You're asking a lot of these questions and I want to make sure everybody gets the information at the same time. So when you get the software, I teach you the setup. You're going to get 2 one-on-one sessions with me, an hour apiece. During the one-on-one training times, I'm going to give you the workspaces and the templates with the settings and the parameters all figured out. These are not the most optimal settings for these markets. But you know what? I used the same default settings for all of the charts, but the one where we put CL on top. Every single chart has the same parameter values for the date look back and for the swing strength. They are generic settings. If you let me, when we're setting up your software, the NQ has a more accurate setting. The ES has a more accurate setting. The DAX, the bonds, the notes, the grains, the euro yen, euro dollar, pound dollar, Kiwi, Aussie, all of these pairs, they have more particular, higher accurate signals. I can elevate them 10 to 15%, but I need to work with you one-on-one to know what markets you're trading, what time frames you're on. We did it with a customer the other day, and the guy went from, oh, this is okay, to, holy cow, save those settings for me, please. Right? And it's the difference between knowing and not knowing what they've got planned. So the training is included. We have video archives dating back 10 years. We also have a discount code that I want to give you. But most importantly, I want you to understand, and it was important for me today, I just felt like I needed to go through this with you. I want you to see an uncomfortable truth about what's happening. You will never hear this spoken about on TV. You'll never hear some financial analyst mention any of these concepts, yet they are fundamentally truthful. They are driving this market. I can show you signals that are driving the overall market. Why is this thing still going up and up and up? I can tell you. We can point to the science behind it. I know when it's not going up and up and up anymore. Relatively certain, of course. I'm not God, at least I don't think I am. Not the God, anyway. And so by showing you this, I wanted you to sort of bestow upon me a temporary credibility. A temporary credibility so that when we looked at these actual signals together, when we came back and applied CL signals to the NQ, for example, and you look at the times that I gave you those signals in advance, and we measure what was happening at those times, and looking at all of those things, you're seeing that we can catch these turds with their hands in the cookie jar. And there's no way statistically that I can give you some time in the future and it actually does this and this and this and this and this. It's impossible. Try it. So here's what's involved. This is my favorite part. And if it's not your thing, man, I get it. But if you want to be in on the joke, if you want to fight fire with fire, there's kind of one last screen that I want to put here. This is a centuries-old quote, Miyamoto Musashi from the Book of the Five Rings. You win battles by knowing the enemy's timing and using a timing which the enemy does not expect. This is who the banks think you are. This is who the banks think you are. And 95% of the time, they're right. You are a physiological, emotional nightmare. And guess what? They know when you're going to be happy. They know when you're going to feel sad. They know all of these things in advance. And I've shown you two methods today that we can go back and we can reference. But you know what they don't expect? They don't expect you to believe a word I've said.